Hello everybody, and welcome to Everyday Funding's webinar Wednesday. I'm Patricia Bauer, and today I'm going to be talking to you about credit, using it creatively and responsibly. So I was told a story by Michael Mulholland, and I wanted to share that with you today. So several years ago, he received a credit card in the mail with 0% interest. And it had a cash advance feature. It had a $50,000 credit line, so he took $50,000, went down to Florida, and purchased a house with it. Then he did a light rehab on the property. All he had to do was some paint and carpeting. All the major fixtures were fine, and he rented out the property. He then went to a local bank, and he refinanced the property at 100% loan to cost. Now, loan to cost is a little different than what you're used to hearing. You're used to hearing LTV, or loan to value. So let me just explain what that is. Loan to cost is simply what you purchased the property for and how much you can show in receipts that you have put into rehabbing the property. So your cost. So those two numbers combined is divided by the loan amount is your loan to cost. He was able to get 100% of the loan to cost, which equivalated to 25% of the loan to value, the appraised value on the property. He did this within 6 months and was able to pull out all of his money, pay back the $50,000 on the credit card. And remember, he did this in just a few months, so it was interest-free. That credit card allowed him to purchase a property, rent it out, without having a mortgage, pay off the credit card, and he did this all interest-free. So how is he able to do that? The answer to that is he had good credit. So understand your options. There are lines of credit, which is a loan amount that a lender has committed to you over a specific period. You can access that loan amount repeatedly, so you can take some of the money out, pay it back, and then keep taking more money out up to the maximum allowable limit. So these terms are usually very good, low interest rates, and the line is available to you instantly. So when you make an offer on a property, you can have the money the next day. They're usually short-term, usually very low interest rates. Then you have credit cards, where you can borrow up to a maximum amount, and this too will be based upon your credit score, your income, and your payment history. Some credit cards will have maximum available lines and maximum cash advance lines. So you want to look at how much they will advance you in cash. And watch out, I will warn you that a lot of times the cash line is at a higher interest rate than what the credit card is telling you that your purchases will be at using that credit card. So just watch out that you're not overpaying. You could end up with 24% interest on a cash advance versus 14.99% on just making the purchase at the store.
And do those compound? Like, let's say your regular APR is 20 and your cash advance is 30. Are you paying 50 then?
No, they're going to calculate the two numbers separately. You'll see a line item on your interest rate. So they'll have, let's say you have $5,000 out on the revolving line at 14.99%, and they're charging you, let's say, $50 that month in interest on that. But then you have $10,000 out on a cash advance at 24% interest, and they're charging you $100 in interest on that. So the total is you're paying $150 in interest that month.
All right.
Great question. Thank you, Bobby. So understand, again, your options. You can get a home equity line of credit called a HELOC. This is essentially a second mortgage on your house based on the equity that's in your home. Again, typically they're very low interest rates. You typically have a 10-year draw period where you're allowed to access those funds, pay it back, and then use those funds again. There are personal unsecured lines. So if you go down to, typically your credit unions are better for those. Again, you have to have very good credit in order to get a personal unsecured line. However, once you do, they too are at very low interest rates, and you're able to access those funds again and again. And then there are secured lines of credit where you put up something as collateral. So, for example, if you have a $50,000 CD, certificate of deposit, the bank will hold that CD and give you a $50,000 line of credit secured against that CD. Again, you'll get a low interest rate, but you are putting up some sort of collateral, whether it's a CD or something else. They want collateral for that money. Then there are marketable securities that you can pledge. Essentially, it's the same as a cash secured line, except it's using collateral as stocks or bonds. Unlike cash secured lines, you'll only receive 50% of the security's value. So 50 cents on the dollar. So if you have a $10,000 security, they'll give you a $5,000 line of credit. Two major benefits to this is that it's quick cash. So if you're offering, a cash offer on a house, you could have those funds available tomorrow. So it gives you a better bargaining position to purchase that property. And the second thing is that the property is going to be free and clear. There won't be a mortgage against the property. That is, as long as you have enough securities to pledge. So you have to be very careful when you're using your credit. When you use a line of credit, you have to typically pay interest. Your 0% lines of credit are typically 12 to 18 months.
Sometimes even 6.
Oh, even 6, right. So you have to watch that you get that money paid back within that certain time period. Otherwise, you're going to start paying higher interest. Over 0%, you're going to be paying interest, period, on it. You have access to quick cash, and that can cloud your judgment. It's easy money. So investors opt to bid higher on a property because, I have it available. I could do that. Stick to your numbers. If you come up with $50,000 is my max for the purchase on this property, don't go to 55 just because you have the money available. A lot of people are too tempted to do it because they just want to get that property.
In the long run, having that extra capital available and investing it into the project is going to make for a better spread for your project anyway. So you're really just kicking yourself in the butt if you do that.
Right, absolutely. So the more credit you use, the less quick capital you'll have in the future. So use your credit wisely. It's very important to note that there's a difference between a commercial mortgage and a conventional mortgage. Here at Everyday Funding, we do true commercial loans. What does that mean? Basically, it means that we do the loan in the name of your LLC, and it does not appear on your personal credit report. So it's not going to affect your FICO score, it won't affect your DTI. And you're able to buy more properties that way because, again, you have more credit available.
That's very interesting.
These mortgages don't show up on your personal. So using your credit, you really have to discipline yourself. Even when you have the 0% interest card, you are still required to make minimum monthly payments. Using credit can be complicated. A lender may not renew a line of credit when it reaches the end of its term. It's unusual, but it does happen. So be very careful and use your credit wisely. One of our clients recently got into a rental business with a line of credit. The investor had a $60,000 HELOC, a home equity line of credit that he had against his house. He found a property for $48,000. He purchased it. He put $10,000 in rehab, again, using his HELOC. At this point, our client was all in for $58,000. But he did not owe any money against the investment property. There was no mortgage against that property. He was using his HELOC. He then refinanced the property out 18 months later for $85,000, paid back his HELOC, and now he was able to just repeat buy, renovate, rent, refinance, and repeat. One of our favorite things to do. So how can you get lines of credit? You have to get a better credit score. If you're not at about 700 in your FICO score, that's really where you want to be, especially in New York. I know outside New York they do lower FICO scores, but in New York, 700 is a minimum where you'd like to be. That's when you're going to get the best interest rate and the best offers on your cards or even your loans. Your loans are going to base their interest rate off your FICO score. It's one of the many determining factors. So what do? Get a copy of your credit report from all three bureaus. As we've discussed before, the big three players are Equifax, Experian, and TransUnion. We recommend that you go to creditchecktotal.com. You do have to put in a credit card. They will charge you $1, and you can pull all three reports. Just remember, you only have 7 days to go back in and cancel that account before they start charging you a monthly fee for your credit monitoring. So if you are below 700, it might be worth it to keep it so you can monitor your credit for a couple months. You could cancel at any time. But if you see that you're above 700, pull your report, download it, and then cancel because you're good to go. So now that you have your credit report, look at it. Dispute all the inaccurate information, past addresses, inquiries, anything that's not correct on there, dispute it. All hard inquiries will bring down your FICO score. So you want to dispute these too. If a line of credit has been obtained by one of those inquiries, don't bother disputing it. If you went to Ford Motor Company to buy a car and you ended up taking out a car loan, you can't dispute that inquiry because it did result in a line of credit in one form or another. But anything that you did not get a credit from, dispute it. Get those inquiries off, and you'll be amazed on how quickly your FICO score will go up just by not having those inquiries on your report.
And one more thing I just wanted to add in, a little ninja trick here, especially if you're younger, if you're just starting out trying to build your credit. One of the best things you can possibly do is to open up a store card. Just ensure that it has zero annual fee. And this is the same with credit cards too. When you're first building, you don't want the annual fee to creep up on you and forget to pay it and negatively impact you. So always look for a zero annual fee and keep that card open. Let it be one of your anchor cards, even if it's just a $300 line. One of the biggest things on your credit report, well, maybe not the biggest, but one of the things on your credit report is the age of your credit history. So opening the credit line early and keeping it open is going to keep that age of history very high.
Great point. Thank you, Bob. So, as we said, hard inquiries can be disputed and removed as long as the inquiry did not result in a line of credit. It's best to dispute them, otherwise they negatively will affect your credit score for up to 2 years. Disputes can be submitted to all bureaus via fax or mail. Faxing will result in a faster response, but persistence is key. Typically it doesn't come off the first time you dispute an item. Sometimes you're going to have to do it 2 or 3 times. So just be consistent. Check your report each month. Dispute any inquiries that have not been removed. It'll usually take about 30 to 45 days before you actually get those inquiries off of your credit report. So let's talk about each specific bureau. Experian. Experian will not let you dispute inquiries online. You must call them. Mail or fax your dispute, but call them first. Be confident when you're on the phone with them. Don't show any uncertainty. You want to tell them, I did not apply for this. I want this off my credit report. And again, don't dispute anything that did result in a line of credit because you've already got that line, so that's wasting time. Again, log on to totalcreditcheck.com. Click Dispute Information under its Resource tab. They will ask you for some personal information, but once it's completed, access to the credit bureau is granted. Look for inquiries and get reports. Call 1-866-583-0303. That's the number for Experian. And tell them that they have unauthorized, fraudulent inquiries on your report. That's very good terminology to use. It'll really get their attention. Then you have Equifax. Equifax has a website, www.equifax.com. Click on Report Assistance, and then you can click on Initiate a Dispute Online. They will take that online for you. Again, don't dispute anything that has resulted in a line of credit because it's just not going to come off. You may need to do that a couple of times. It may not come off the first time. Just be persistent. Again, typically takes 30 to 45 days. And then you have TransUnion. They want their disputes via mail or fax. You can send them to the fax number 610-546-4771. And if you call or email us here at Everyday Funding, we'll give you a sample letter that you can use to send in your disputes. All bureaus, except this one, will accept the disputes via mail. So this one, with TransUnion, you want to fax it in. You should receive your results within 30 to 45 days. That'll help bring up your FICO score and allow you to access more credit. So let's just quickly go over how your credit score is calculated. How do they come up with this FICO score? Well, 35% of your score is your payment history. So make those payments on time. Even if you are a couple of days late in making the payment, you'll get hit with the late fee. But don't let it go beyond 30 days. That's when it hits your credit report. They don't report 10 days after the payment is due. They only report once you are 30 days late. So make sure you get the payment made before the 30 days, pay the late fee, and you just saved yourself a late showing up on your credit report.
And of course, it's best to do that exactly on time or a little bit before.
Absolutely.
You just get it out of the way.
Right. You don't have to pay that late fee. Who wants the late fee? But I'd certainly rather pay the late fee
than take a hit.
Absolutely. So then the next most important item is your credit utilization. That's how much of the credit you have available are you using. So if you have a $10,000 credit line, they don't like to see that you've used more than 30% of that card. So $3,000 is the max that you want to put on that card. Otherwise, this will negatively affect your FICO score. And your utilization accounts for 30% of your FICO score. So that's a really important item. I know that it's so tempting to give you that $10,000 line, and you want to charge up to that $5,000. Oh, I only used half of it, right?
Right. Big mistake.
Yeah, unfortunately, FICO will hit you for that. So also, 15% of your credit report, your FICO score, is having different types of credit. So we all know your credit cards are revolving lines of credit. Auto loans are fixed loans, mortgages, HELOCs, unsecured lines of credit. So having a variety of credit will account for 15% of your score. So let's just say you don't have a mortgage, you have a couple of credit cards, that's it. One little ninja trick you could do is go down to your credit union and request a small unsecured line of credit and use that line of credit to pay off one of your credit cards.
Right. And typically you're going to see a way lower interest rate on that loan than on a revolving line of credit because it's a fixed loan.
Absolutely. And now you've created a variety of credit, and that's good. You're paying lower interest, and you're going to bump up your FICO score, even though you owe the same amount of money. And
it's actually going to instantly bump up, too, because you're paying off that one lump sum that you were maybe even a little bit late on, so it's going to positively impact your score. And then they expect you to, over time, pay off the loan, not all at once. So you have your monthly installment payments for the loan, so it's going to jump your score up, and then you still have that same amount of debt out with a structured plan to pay it back.
Right, absolutely. So you have two benefits to doing that. And as you had said before, Bobby, the length of credit, your credit history, that accounts for 10% of your FICO score. So if you have a credit card, even if you're not using it, don't close that line. Don't allow them to close that line because you're not using that line. So every 2 or 3 months, use the card, buy yourself lunch, just to keep that card active. So So you'll have a nice long credit history. So don't close out lines just because you're not using them anymore.
And another thing with the credit history, if you really can't even get a store card, if your credit is that shot, if you really messed up somewhere before, try to find an authorized user, a friend that you trust, that trusts you. You can request for usually about $15, maybe $35 at tops. You can request to become a card holder on their account. When the card comes in, just have them cut it up. You'll take benefits of every time that they use their card and pay it on time, and you won't be any liability to them.
That's a great tip. I know what I did when my children reached 19 years of age. I made them get a secured credit card. So they gave the bank, actually with them, I think they used Discover at that point in time. And they gave the Discover $200. They got a credit card that had a maximum allowable $200. But after 1 year of paying that back responsibly, on time, no late payment, they then requested it to be transferred into an unsecured line. They got their $200 back, and then they bumped them up to a $1,000 credit line.
All right, so you just have to prove to them for 1 year that you're able to do what most people can actually do if you sit down and dedicate yourself to being able to do it.
Absolutely. So there are great little tricks, and we're going to go over a few more of those with you. Like you said before, become an authorized user. If somebody else has a credit card that is not maxed out and has a good payment history, you can ask them to put you on as an authorized user on that account. When the credit card comes in the mail, you simply cut up the card. You're not going to use it on them, but you are going to benefit from their good credit. If you are currently renting, if you don't own your own home right now, there's a thing, Rental Karma, rentalkarma.com. You can ask your landlord to please report to Rental Karma. They can report monthly or quarterly, and this will show up on your credit report that you're making on-time payments, again, helping to bump up your FICO score. Get a personal loan to refinance out your revolving lines of credit, pay down some of those credit cards. Now it's on a fixed loan, lower interest rate. You have a variety of credit, so that's good for your FICO score. Dispute any negative reported items. Even if you do have a late payment on your card, the credit companies, when you dispute, they send a letter to whoever it was. Let's say it was Capital One Bank who said that you had that late payment. They only have 30 days to verify with the credit company that that late payment is true and accurate. If they do not verify within 30 days, the credit companies have to take off that late payment. So even if you do have a late payment, dispute it. You have a 50-50 chance of them responding within 30 days, verifying that it is a late payment. You might get that off your report. So it's worth taking a chance. Also, you can get business credit cards that do not appear on your personal credit report. If you go onto our website, longislandrea.com, LIREIA.com, click on our resource tab, you'll find a company there called Fund and Grow. Fund and Grow gets you true business lines of credit, credit cards that don't appear on your personal report. Benefits to that is that now, if you do have money on your personal credit report, you could transfer the balance of that business report. Now it doesn't show up. Your FICO score goes up. And by using our link on the Long Island REIA website, you'll get a $500 discount off their fee. So you can go to them directly, but you're going to pay an extra $500 to do that. Again, you have to have a decent FICO score. They like to see about 700 and above. So if you're down at around 650, I would caution you not to bother doing that at this point in time. Use some of these other little ninja tricks that we've shown you to get your FICO score up, and then go for those business lines of credit. Again, you'll usually get those at 0% for anywhere from 6 to 18 months. So transferring your balances from your personal cards onto those is going to save you in interest. Or if that's not the case, if you don't have a lot of money out on your credit cards, you can use those lines. They have a way of converting it to cash They do charge a fee for that, but it's a way that you can access funds that will not appear on your personal credit report and get you into investing. So here at Everyday Funding, we are available to speak to you. We can help you get pre-qualified. If you're in contract on a loan, we'll help you complete your loan application. We would love to meet you. So we have our Long Island RIA monthly meetings. This month it's a different date, Bobby, right?
Yes, this month, it's usually the second Tuesday of every month. This month we had to move our general meeting to the third Tuesday, so it will be December 18th at the Huntington Hilton. That's on Broad Hollow Road, or 110 in Melville.
And that starts at?
Sign-in starts at about 6:30. We usually get the show on the road closer to 7.
Okay, great. I'm Patricia Bauer. I will be there at the meeting, and I would love to meet you. So stop by, say hello, and if you have any questions at all, you can always just call us too or email. Our phone number is 631-343-8700, or you can email me, patricia@everydayfundingservices.com. Everyday Funding is owned and operated by investors for investors, so we're here to help you succeed. Thank you for joining us on our webinar today. Have a great day.